Everyone thinks empires fall because of wars, lost battles, revolutions, angry crowds. But if you look closer, the real reason is almost always the same. The money breaks first. The soldiers are still marching, the palaces are still shining, but the coins inside the treasury are already fake. The empire dies not when it loses power, but when its money loses trust. It happened to Rome when its silver denarius turned into tin. It happened to France when the king's gold was replaced with paper assignats. It happened to Britain when pounds stopped being promises of gold and became promises of promises. And it's happening again, only this time on a global scale. The paradox is that every empire in history begins with honesty, gold in hand, real trade, real value. The discipline of metal keeps governments small, wars short, and debts payable. But wealth breeds illusion. People start to believe that paper, debt, credit, liquidity can replace the metal itself. The empire expands not because it's richer, but because it's borrowing its future. Look at the United States in the 20th century. The dollar was once as good as gold. Then in 1971, Richard Nixon quietly closed the gold window, supposedly to protect the economy. In truth, it was the moment the empire went off the leash. For the first time, the world's reserve currency was backed by nothing but confidence, the same fragile substance that doomed every power before it. It's a perfect illusion. Paper wealth expanding while real value stagnates. The charts go up, the headlines sing of growth, but underneath, the debt mountain grows higher than any cathedral, and the gold beneath the system, both literal and moral, thins to dust. Every civilization has followed the same 7-phase cycle, from gold to credit to paper to inflation to distrust to crisis, and finally, collapse. Yet each one believed it was smarter than the last. The pattern repeats because human nature doesn't change. We crave abundance without restraint, comfort without cost, and so we print, borrow, and promise until the arithmetic calls our bluff. That's the real story behind every unexpected collapse. Not betrayal, not politics, but simple math catching up to fantasy. Every empire begins with one simple belief: gold can be trusted. Gold doesn't rust, doesn't lie, and doesn't obey kings. That's why the earliest powers, from Lydia to Rome, from Venice to Britain, built their authority not on words, but on metal. Gold was truth in coin form. Now look at Britain in the late 1600s. A small, wet island surrounded by enemies, yet within 2 centuries it would control a quarter of the planet. Not by conquest alone, but by invention. In 1694, the British elite, merchants, bankers, and politicians, created something new, the Bank of England. On paper, it was meant to stabilize the crown's finances after years of costly wars. In reality, it was the world's first perpetual motion machine of credit, the device that could turn promises into power. Here's how it worked. The government issued bonds, IOUs promising repayment with interest. The Bank of England bought those IOUs, paying not with gold, but with paper banknotes it printed itself. People accepted those notes because they could supposedly exchange them for gold on demand. But the bank never had enough gold for everyone. It didn't need to. As long as the public believed the paper was as good as gold, the system worked. This was the birth of money without metal, a political technology disguised as finance. It changed everything. The king no longer had to wait for taxes or loot from colonies. He could wage wars immediately, financing them through debt that would be repaid by future generations. The more the empire expanded, the more collateral it seemed to have. Colonies brought silver, sugar, and slaves, and each shipment became the foundation for new loans, new paper, new wars. The result was an empire built on trust, or, more precisely, on controlled illusion. London became the heart of global finance, its gold vaults a symbol of strength, but its real power lay in paper. The Bank of England's notes circulated from India to the Caribbean, carrying not metal, but belief. And yet, the architects of this system understood the danger. They knew that paper breeds temptation. Once you can create money by signature, every crisis invites more printing. Every war justifies more debt. That's how the empire learned its greatest secret. If gold limits ambition, credit removes the limit. This cycle, creation of a central bank, expansion of paper promises, and the illusion of infinite growth, became the model for every major power after Britain. France with its assignats, America with its Federal Reserve, Europe with the ECB, all followed the same blueprint drawn in London in 1694. Behind the uniforms and flags, behind the speeches about freedom and trade, stood a quieter empire, the empire of debt, and it would outlive them all. Once the machinery of paper money was built, the illusion began to bloom. For more than a century, the world lived inside a dream where debt looked like wealth and expansion looked like progress. The empire entered its golden age precisely when the gold itself started disappearing. Britain in the 18th and 19th centuries became the workshop of the world. Steam engines, railways, colonies, all fueled not just by invention, but by credit. Bankers in London financed canals in India, plantations in the Caribbean, railroads in Canada. Every loan looked like growth. Every printed pound looked like capital. The magic trick was simple. As long as the paper kept moving, nobody checked the vault. You could say this was the first global hallucination of wealth. Prices rose, trade exploded, and newspapers spoke of progress without end. The middle class swelled, the merchant elite thrived, and the government boasted of record revenues, all while debt quietly multiplied behind the scenes. The same pattern reappeared in America a century later. In 1913, Congress created the Federal Reserve, promising stability after decades of panics. But the real purpose was the same as in London 2 centuries earlier, to manage infinite credit under the mask of science. Within 1 year, World War I broke out, and the Fed financed it the same way the Bank of England had financed Napoleon's wars, with printed promises. By 1918, the U.S. had transformed from a debtor to the world's main creditor, and the dollar began to replace gold as the language of empire. This was the phase of illusion. Economists spoke of permanent prosperity. Politicians claimed they had mastered the cycle of boom and bust. Even the Great Depression couldn't kill the dream. It only gave governments the excuse to intervene more. Stimulus, deficit spending, monetary expansion, all elegant names for what earlier generations called debasement. And yet, from the outside, everything glittered. In the 1950s, after World War II, the United States built a new global order, the Bretton Woods system, in which every major currency was pegged to the dollar, and the dollar itself was pegged to gold. It was a promise built on a promise, a house built on the memory of metal. For a while, it worked beautifully. Europe rebuilt, Japan industrialized, and the dollar became the sun around which all other currencies orbited. But the illusion had a timer. The more dollars America printed to fund its wars and welfare, the more gold drained from its vaults. By 1971, when Nixon temporarily suspended convertibility, the final link between paper and reality snapped. The global economy floated free, untethered, unanchored, and seemingly unstoppable. We entered an era where numbers could rise forever, where credit became the oxygen of civilization. Stocks, real estate, GDP, all inflated together in a symphony of confidence. The empire of paper reached its peak. People said, "This time is different." It never is. If you've ever wondered why every boom ends in a bust, remember this: illusions grow faster than reality. And when belief becomes the currency, trust is the only gold left. Every empire believes it can outsmart arithmetic. Every politician thinks confidence can replace collateral. But in the end, numbers always vote last, and they never abstain. By the late 20th century, the world had built a financial Tower of Babel. Every country issued promises, bonds, credits, entitlements, and measured wealth by how much of those promises people were willing to hold. Debt became not a burden, but a product. The bigger it grew, the more developed an economy looked. The illusion was total. Then, in 2008, the mathematics called the bluff. It began in the United States, inside the temples of finance that had once symbolized modern genius: Lehman Brothers, Bear Stearns, AIG. They didn't fall because people stopped working or inventing. They fell because the numbers stopped adding up. The pyramid of credit, mortgage-backed, reinsured, and leveraged, required infinite growth to stay stable. The moment growth slowed, the whole structure imploded. Governments rushed in with bailouts, guarantees, and liquidity injections, elegant words for creating more money out of nothing. In a panic, central banks broke their own taboos. The Federal Reserve's balance sheet exploded from under $1 trillion to over $4 trillion. Europe followed. Japan had already been there for decades. They called it quantitative easing. In reality, it was quantitative desperation. But here's the irony. The very act of saving the system ensured its decay. By rescuing debt with more debt, the empire removed the last discipline left. From that moment, the cost of money became nearly zero. And when money costs nothing, everything else eventually does too. History had seen this movie before. In 1790s France, the government printed assignats backed by confiscated church lands. At first, it seemed genius, paper backed by property. But by 1795, prices had risen over 13,000%. Savings vanished and trust collapsed. Bread riots turned into revolutions. The paper burned faster than the ink could dry. Rome did the same 2 millennia earlier, shaving silver from its coins until the denarius became worthless brass. Empires never think they're inflating. They think they're stimulating. The math doesn't care. By the 2020s, the pattern had gone global. Nearly every major economy carried debt above 100% of GDP. Governments borrowed to pay interest on earlier borrowing. The world had entered what historian Neil Ferguson once called the empire of paper. And like every empire before it, it now faced the same unbreakable law. You can delay collapse by printing, but you can't print trust. When the equations diverge too far from reality, reality wins. Always. If you're hearing this in 2025, remember, the crisis isn't coming. It's already built into the math. The only unknown is when the illusion ends. If this perspective broke through the noise for you, write in the comments where you're watching from. Look around. The flags have changed, the names have changed, but the mechanism is the same. What Britain did with the pound, America now does with the dollar. And what the dollar did in the 20th century, digital currencies and central banks are preparing to do again in the 21st. The empire hasn't ended. It's just gone online. After 1971, when Nixon closed the gold window, the world didn't return to discipline. It doubled down on illusion. The dollar, no longer anchored to metal, became anchored to trust in America itself. The U.S. could print as much as it wanted, because everyone, from Saudi princes to Chinese manufacturers, accepted those dollars in exchange for real goods. Oil was priced in dollars, debt issued in dollars, trade settled in dollars. The new gold wasn't a metal, it was the U.S. Treasury bond. But here's the paradox. The very success of this system ensures its eventual failure. When money equals debt, expansion is survival. Every year must bring more borrowing than the last, or the machine stops. So interest rates are cut, credit is loosened, and consumption is inflated, until the future itself is mortgaged. In the 1980s, this credit wave looked like triumph. Reagan's America borrowed and boomed. In the 1990s, Wall Street financialized everything, turning risk into product, debt into investment. The Soviet Union collapsed not only because of politics, but because it couldn't print the world's reserve currency. The empire of paper had no rivals left. Then came the digital age, the final phase of abstraction. Now money isn't even paper, it's numbers on a screen, created not by printing presses but by keystrokes at central banks. Quantitative easing, repo facilities, stimulus checks, all modern names for the same alchemy. The illusion has evolved into code. And yet, the symptoms are identical to those that destroyed every past empire. Prices rising faster than wages, assets inflating beyond reality, debt so vast that no generation can pay it back. The global economy depends on perpetual expansion, yet the planet itself is finite. When you can't print resources, when trust wears thin, the arithmetic returns, quietly, brutally. Look closer. Nations are now experimenting with central bank digital currencies, programmable money, trackable, controllable. It's sold as innovation, but it's the logical endpoint of the same imperial cycle. From gold to paper to data, each stage increases control and reduces freedom. What was once trust in metal became faith in government. Now it's faith in code. The result? A borderless empire without armies, ruled by interest rates and algorithms. And just like every empire before it, it pretends it will last forever. They said the same in Rome before the silver vanished. They said the same in Versailles before the assignats turned to ash. They said the same in 2007 before the banks collapsed. And they're saying it now, in 2025, as central banks prepare new rounds of stimulus. The laws of money haven't changed, only the costumes have. When real value diverges too far from printed value, the reckoning begins. The empire may no longer have colonies, but it still extracts tribute, through inflation, through debt, through the invisible tax of a devalued currency. Every empire ends the same way, not in a battle, but in a balance sheet. The swords and banners only mark the final act. The real collapse happens quietly, when people stop believing that their money means what it says. We live now in an age where money is no longer a thing. It's a story, a digital fiction agreed upon by billions, sustained by trust in screens and institutions. We tell ourselves it's different this time, that algorithms are smarter than emperors, that central banks are wiser than kings. But every system built on belief eventually tests the belief itself. Arithmetic doesn't care about ideology. When debts grow faster than production, when promises multiply faster than fulfillment, something snaps. Not out of malice, but out of math. Systems don't die because people are evil. They die because the numbers stop adding up. History's warning is simple. Gold was never about metal. It was about limits. It was a reminder that energy, time, and trust must be anchored to something real. Every time humanity breaks that anchor, it builds castles in the air, credit empires, digital utopias. And every time, the wind eventually comes. You can already feel it. Inflation as a quiet tax, assets priced in fantasies, currencies drifting like sand. The same forces that broke Rome, France, and Britain are whispering again through stock charts and policy meetings. And just like before, the crowd still believes. It will last. Maybe it will, for a while. But when the illusion ends, wealth returns to weight, to land, to labor, to whatever still carries value when faith evaporates. That's the hidden rhythm of civilization. Creation, expansion, illusion, collapse, renewal. 7 phases, over and over, until someone learns not to repeat them. If you're hearing this in 2025, know this. The empire hasn't fallen yet, but the numbers are already trembling. The next system is being written right now, maybe by the same hands that will one day say they didn't see it coming. The cycle always restarts, but awareness is the first rebellion.